from CleverFX Investments. Today we're going to go over stochastics. Before we start the lesson, we want to remind you that forex is a risky business and you should trade with caution. And if you ever feel too frustrated to trade your money or simply don't get the markets, let our experts here at CleverFX Investments trade your money for you. For more information on that, visit our website at www.cleverfxinvestments.com. Let's get started. What is stochastics? It's basically an indicator. It's an oscillator that shows you points in the market that are oversold and overbought. Okay, so we go to our oscillators and then we click on our stochastic oscillator and then we simply click OK. Okay, and now with the stochastic oscillator, there's two values, 80 and 20. Okay, what the 80 line means is that if the value of the stochastic is above 80, then that just means that the market is overbought. If the stochastic is below the 20 mark, that means that the market is oversold. So basically, you can use this oscillator to find points in the market where it might be oversold or overbought at certain points in the market. Okay, so as you can see, they're not always perfect because stochastic oscillators is lagging first of all, and you have to consider the trend of the market as well. Okay, so as you can see up over here, here's a uptrend move, right? And whenever we have overbought territory, whenever we go into overbought territory, the drawdown to the oversold territory is not that much. Okay, you rather get into long positions because it's a uptrending market. Okay, so as you can see up here, okay, overbought territory, you could have sold right here. Okay, and you would have made let's just say about 50 pips, right? But then you found that the market was oversold here, okay, and you would have made about 100. So just going long is usually better in a upward trending market. Okay, so we can also use stochastics as a powerful tool for divergence. Okay, what is divergence? Okay, so divergence is basically when your price action is doing one thing and your oscillator is doing the other. Okay, as you can see here, the stochastic oscillator was having a lower high, but price action was showing a higher high. So you got divergence here. Okay, that meaning that price action wants to do something else. Okay, and then as you can see, once it crossed over, once this crossed over, you could have taken a short about right here. You would have been about 40 pips in the hole on this wick, but if you survived all that, you would have made about 150 pips. Okay, so you can use the stochastics as a divergence indicator as well. It's not the best. We recommend either RSI or MACD. So that's what the stochastic oscillator can be used for. Okay, let's look at another example. NZD/USD. Let's pull up our stochastic oscillator. Okay, and as you can see, it's a trending market, trending upwards, right? Now let's draw this trend line in here really quick. Okay, and as you can see, the market is approaching a oversold territory. Okay, however, I would stay away from this because if you look at this, you can see there's slight divergence going on here. The market is slightly pointing downwards. Okay, slightly pointing downwards. The stochastic oscillator is slightly pointing downwards, but yet our price action is going up. Okay, so that is a good indicator for knowing that you probably shouldn't get long on NZD/USD, even though the market is showing that it's oversold, since there's divergence. Okay, so basically you can use stochastics as a indicator to find where the market is potentially overbought or oversold. You can also use this as a divergence indicator, since it is an oscillator, and you can find points in the market where you can enter and exit. This is basically a strategy which you can use with in conjunction with other things such as MACD, RSI, RVI, many other things. Stochastics is a very good complement. You shouldn't use stochastics alone, but it's a good complement to other indicators. Okay, this is Sonny from CleverFX Investments. I'll see you next time.